Okay, so this is going to be very exciting. Today, I'm going to attempt a very, very exciting video. It is basically the overview of personal finance, or in other words, the world of personal finance. What you need to know, the whole overview, like how I wish I knew this before becoming a personal financial advisor. How I wish I knew this as just an individual. Like, no one tells you all of these things. You might hear it, but no one really goes in depth into all of this. And if you were like me, it's like so embarrassing to ask people, hey, what's this thing? What's this thing called whole life, term life, CPF, retirement, investment, like this big jargons and stuff like that. It's just so confusing. And I think it's been like about 1 or 2 years for me to kind of understand enough to kind of get you started on what are the first step, second step, third step, so on and so forth. So I just thought of doing this video to kind of do that kind of overview. And this video is quite applicable wherever you are, so long as you are alive, um, and even after you are gone, right? Because we're talking about personal finance, we will talk about legacy planning, so on and so forth. So not to bombard you with like all this information, we are going to kind of dive deep into the world of personal finance with an overview first, okay? So what we're going to do is, as you can see on the slide, this is called the world of personal finance. So one of the diagrams I kind of came up with just before this video, okay, is just basically what are some of the options you have, what are some of the investment vehicles you can actually use, or just to get that knowledge base. I think no one actually talks about this anywhere in the finance space. It's all about invest in this, invest in that, try this new trend, try that new trend. Um, and then there is the other spectrum, which is you need to buy this protection, you need to buy that protection, you need to review your stuff. And then I'm like, but who is there teaching me like the basic stuff, right? And there's so many texts out there. There's so many, like, I don't think anybody will just watch this. So yeah, so here we go. Okay. So how I like to start off this. Okay, let me just put off the mic here. So how I like to start off is, I think let's start off with, let's say, in the early stage of your life. Okay, and then there would be the working stage. Okay, and then there would be the mature stage. Okay, and then there would be the legacy state. Oops, legacy, legacy. Okay, and there's actually one after that, actually, which is your pre-planning. Okay, so let me deep dive into every single one of them, one step at a time. Okay, let's start with the the early kind of stage. This is the people who are kind of after graduation, they're trying to enter into workforce. So I will put this kind of in your 20s to your 30s. Okay. In your working, we have, after your 30s to your 40s. Okay. This is your time where you kind of want to do your, maybe get your property, okay, or marriage, so on and so forth. Okay. And then you have your mature stage. So this is where perhaps you are in your, let's say, your 40s to your 55. This is where, because of your CPF, okay, and I would say 55 and up from here. Okay. So that is just the gist of this. And pre-planning starts as young as 3 months, or while, for the mothers who are getting pregnant, right? Yeah, it starts from there as well. Okay, so 3 months all the way to, say, university. Okay, to pay for the university of the child, should they, of course, choose to send them to university or private schooling as well. Okay, cool. So we will start off with the early 20 and 30s. What are some of the things that are commonly recommended for these people, this age group? Will be things like whole life, okay, or term life. Usually term life happens because of group insurance. Like for any Singaporeans, for the men, they have MINDEF term life insurances, so that's quite cheap. Okay, but however, I always advise that to always get a whole life first, or term life. Let me put it this way, like whole life is basically your foundation, right? Because once you can get your foundations there, you only pay for a certain set of a period of time, and you're covered for the rest of your life. Whereas term life, it is cheaper, a much drastic cheaper alternative, and it does offer you the same amount of protection. However, it's rather temporary. And if nothing were to happen to you, which is great news, this money is kind of being thrown away or not to put to good use, right? Whereas for whole life, if you actually start in your early 20s, based on the product summary, so on and so forth, the surrender value, meaning to say the money that you put into this policy while it covers you your whole life, can be surrendered at let's say perhaps a later age, when you decide that, hey, I don't need this, I have other coverages, and I need this money, or you can use this money to pay for, let's say, your long-term care, like a maid or a domestic helper, so on and so forth. So that's kind of the two things that if anyone's in the 20s or 30s, these are kind of the things. And some of the topics that they will cover here, especially the very serious one, is your cancer care. So they call it the critical illness and the early critical illness. And also not to forget that this thing called TPD, which is your total permanent per total like permanent disability, which allows you which kind of causes you to be unable to perform 2 3 kind of daily activities without the assistance of someone else, right? So this is that. One of the things I want to mention while I'm at this topic is this thing called the ECI, or the early coverage, early cancer, early critical illness. Basically, at least in my team's approach, or at least what I was taught, is that you want to get the lump sum payment to pay and to afford the treatment in the event that you were diagnosed with an early critical illness. And then at the same time, the balance of it, because you know being able to detect it, and at the same time being able to receive the treatment, and having that lump sum as well, allows you the flexibility to not only recover successfully, more or less, but at the same time, in the meantime, that balance can be reinvested to fund your lifestyle, or to help you with your, how do I say, your retirement planning, or even your legacy planning as well, which I'll cover later in this video. Okay, cool. So when we move to the working world in the 30s, early, late 20s, 30s, and 40s, this is a time we're going to get property, or getting married, or migrating whatsoever. So at this stage, right, some of the things that we'll cover here, or people will talk about, is, let's say, your tax reduction. Okay, your tax reduction. Okay, let's see. We have vehicles like ALP. Oh, I should mention here as well. Here, ILP2. Okay, IRP is investment linked policies. So not only there's an investment mechanism behind it, but it's also an investment vehicle to not only grow the capital, get protected, and at the same time get a dividend payout. For example, with companies or providers like Edica, Singlife, Income, so on and so forth. Okay, so investment linked policies, or otherwise known as 101, because 101 represents the death benefit. Should anything happen, you get back at least 1% on top of the principal invested. Okay. What else? We have CPF. Okay, CPF planning as well. Okay, let's see. Yeah, so these are kind of the main kind of topics. And let's say you have a family, children as well. Then we can talk about endowments. I don't think I'm missing anything out. And maybe also family protection, right? Which is coming back to your insurances for your term life and whole life as well. Okay, so I just put here term and whole. Cool. All right. So next up, we have your 40 to 50s, and this is usually where, especially for my case as well, I'm in my early 20s. My parents are maturing in this age range here, and I still have my grandparents who are still around, and they are also kind of like, oh, I have this sum of money, I don't know what to do with it. So for my parents, especially for my mom, I have to make some recommendations, which I did. Some of it is also coming back to the ALP, the 101, because my mom is not working, so I need to think about her income as well. So we have this lifetime payout. Okay, and then we have something, let's say we can have, let's see, fix these as well. Okay, or at the same time, T-bills. These are the more safer options for someone who is not risk adverse. These are some of the things they can talk about. Let's see. Lifetime income, lifetime payout. This is what we call annuity. Annuity. Okay, there we go. And so this is also when you want to talk about CPF. That's where, at the age of 55, you get to withdraw your OA, your ordinary account, your SA based on the recent budget 2024. It's going to change to an RA. So, the question, of course, in everyone's mind is what should I do with the remaining sum of money? Without proper planning, it can affect your retirement planning in terms of the income that you want to receive as you're working, lesser and lesser, perhaps as we mature. Okay, so that's just the gist of it. And so your legacy planning after 55, all the way, let's say, to 85, which is the average life expectancy in Singapore, I think. Okay, so we have a few things, especially this also applies to business owners. Okay, business owners. In what sense? Okay, so we have this thing called the business. Oh, wrong color. Use this another color. Okay, the business protection, or let's say the debt protection. If you have like debts, or you have wait a minute, debts protection, or you have business partners, and in the event of any uh unfortunate incidents that there's a share that will be passed on to the next of kin, that next family, next of kin. So how can you buy back the shares, for example, if you want to take control of the company, or you think that the family is not interested in the business anymore, they want to cash out and stuff like that. So that's something we can do. This is under, let's say, a term life plan. Okay, it's one of the vehicles you can actually use. Let's see, we also have legacy planning, right? So it's about how do you not only enjoy your wealth, how do you actually get a gift for your next generation, right? While you can enjoy yourself, you can also protect yourself with a term coverage, right? And with the death benefit, and the payout and so on and so forth, how can you distribute it over generations through, let's say, a trust? Okay, a trust, wills, or insurances. Okay, so those are the plans as well. We have some vehicles also called universal life. Okay. And yeah, so that's just the gist of it. Okay, I will explain all these details in another video. And so we also have our others here, others. Okay, which is more or less your general insurances like your travel. Okay, for your business, your your workplace. Sorry, workplace coverage. Okay, your vehicles as well, your motor. Okay, we have your maid. You have your fire, and let's say home, just to name a few. Okay, and then if we come back to the pre-planning, what we have here is, let's say we have your endowment plans for long-term saving. Okay, we have your shield plan, which is very important. Okay, we have your accident plan. Okay, and then for, let's say, the birthing mothers, we also have, let's say, maternity plan as well. Okay, so there's so many. If you just look at this, right, the whole like overview is like, oh my god, there's just so many things to consider. Now the question is, which areas do I have, which areas do I not have, which areas do I need to cover? Like, this is just so many information. So what I have created is actually a more cleaner, simpler kind of template for you to just kind of a checkbox. Do I have this? Do I have that? Is there any other things that I'm missing out? So and so forth. Remarks. I think it's just a good overview to kind of have a self check-in, to see where you are in life. Um, yeah, I think this is quite a generic but great kind of a good like 80% overview of what personal finance is for basic beginners, for dummies like myself, back then, you know, um, just to have this sense of security, at the same time, this sense of, hey, I can actually use this to my advantage. Well, of course, insurance is not to your advantage, but kind of to protect what you already have or would have lost even more, right? To hedge it in that sense. So, um, yeah, this is the world of personal finance. Welcome. And I'm here to help. Okay, so for me, I'm introducing this to you because I'm a personal financial advisor with Synergy. We are an independent firm here in Singapore as well. So yes, we are regulated. I'm licensed. Everything I say is just based on my own experience. Of course, please do your due diligence as well. But yeah, we are here to serve you as an independent financial firm. Our job is not to sell you policies or to sell you products or services. Our job is to find you the solutions based on your needs, your current circumstances, so on and so forth. So if you're interested in getting this template, let me know in the comments. You can just type template and I will just send you this Excel sheet or this Notion sheet where you can duplicate and do it as a checkbox. Okay, my name is Riley, and I hope to see you guys in the next video where we share about the in-depth onto all these different vehicles. How does it work? How do you choose? So on and so forth. I think there's such a um, abundance of knowledge for your own consumption, of course. But most importantly, it's for the safety. It's for the family, and of course for the loved ones as well. Okay, cool. So I'll see you guys in the next video. See you guys.